clearly it's a pivotal moment again for the Biocon story again, if you look at it. And what is essentially being discussed and you saw unfold over the weekend is one of the other unlocks in terms of how we are looking to create value for Biocon stakeholders. And what you see happening right now is that we have had the strategic committee recommend that the best way to unlock value in our biologics business was to take the company into Biocon and merge those two businesses so that we build an even stronger story. That meant that we had to also find a way to retire the minorities who were at Biocon Biologics, and the board has found a way to do that. And we were able to negotiate a all-stock deal with the BBL minority investors at the exchange of 70 Biocon Limited shares, roughly, for every 100 shares of Biocon Biologics that they held. And for Viatris, who had roughly about $1 billion of CCPS, we were able to negotiate a similar cash and stock deal where they get $400 million in cash and the other $415 million, we are able to provide them Biocon Limited shares at an exchange swap ratio of 60 Biocon Limited shares, roughly, to every 100 shares of BBL that they hold. So I would say it's been a win-win for the BBL minority shareholders, and certainly a very promising position for Biocon Limited, which creates value for all stakeholders.
Sir, the purpose was that either you provided through an IPO exit for these minority shareholders or buy it out and give them an exit through Biocon. Why weren't you able to do a IPO for Biocon Biologics?
Well, we certainly considered both options, and if you recollect, a couple of quarters back, the Biocon board had constituted a strategic committee, which was asked to specifically look into this topic of what would be the best way to unlock value in the investment that Biocon had done in the biosimilars business through Biocon Biologics. IPO certainly was one of those options that we had strongly considered. We discussed it in the past as well. But given the sectoral dynamics, looking at the opportunities that lie at that point in time, given the fact that there was a debt overhang that the investor community probably wasn't really very convinced about, would have ended up undervaluing the business that we had set up in Biocon Biologics. That was the recommendation that the committee came up with, along with its advisors, Morgan Stanley. And then the board accepted that, saying the best way to create value for all stakeholders, that would be the Biocon Limited shareholders, the Biocon Biologics minorities, the employees, and the other shareholders as well, would be to make sure that we find a way to combine these two businesses and create an even more stronger, powerful combined business as Biocon Limited.
You're raising the stake via cash and via stock. And in stock, I think 11.6% will be held by the minority shareholders once you allocate them through preferential issue. But the street is looking at it as a little more of a dilutive nature from an earnings perspective. How do you respond to that?
I think the way I would see it is these are probably unfounded arguments. If at all this was to be looked at as a dilutive action, then the biggest shareholder in Biocon Limited is the founder, Kiran Mazumdar-Shaw. So if at all anyone has to be concerned about dilution, it would be Kiran Mazumdar-Shaw. But she's been extremely supportive of this. And the reason for this, it's a value creation event. It's not a value dilution event, because it allows us to bring this, first of all, at a very favorable ratio to Biocon Limited shareholders. Second is that the valuation that we've been able to negotiate for BBL has been also favorable, and it does leave significant headroom as Biocon Biologics now gets ready to realize its full launches, to have the full valuation in Biocon Limited. Earlier, if you remember, the Biocon Limited would have only had a see-through valuation to an extent of 75%. And that would have meant that there was a holding company discount, which was attributed. Could be whatever that you would decide. Some would say 10%, some would say 35 or 40%. But today, with this decision that the board has come up with, you basically made it a wholly owned subsidiary. That means that you will capture the full value of the Biocon Biologics business to the benefit of Biocon Limited shareholders. So I would not look at it as a dilutive situation. I would look at it as an accretive situation, which creates tremendous value for Biocon Limited shareholders as well.
I agree with you on that point, sir. I mean, because Biocon has a market cap of 52,000 and you're valuing Biocon Biologics at roughly around 40 odd thousand crores. So there is a value unlocking and consolidation that comes to play there for the shareholders there. It was more, the question was more to do from an earnings point of view, EPS point of view, EPS dilutive. That was the question which is there. But, as you said, the promoter itself doesn't feel that it's dilutive, so we go by that argument. But what about the debt? You spoke about briefly about the part that there is a debt which is there, and the investors were not so comfortable with the debt. How much of debt is there in Biocon Biologics? And when you combine both of them, what will be the debt on the combined book?
Yeah, and I think that's a very fair question that you asked. Let me take you back in time. When we've actually historically, Biocon has been a very conservative group. We've never had any debt on our books. We've never leveraged the balance sheet. So that's been the track record of the founder, of the management. That's how we've operated our business for several decades. When the opportunity came up in 2022, which was truly transformative in nature, to build a global giant out of India, that was when we decided to take that step. And Biocon Biologics today is amongst the top 5 global biosimilars companies in the world. But it meant that we had an acquisition debt where our debt to EBITDA ratio was in the region of 4.3x at that point in time in 2022. When we did the acquisition, our gross debt levels were a little over $2 billion at that time. Clearly, that was something which was not usual for us to be in, and clearly the market wasn't very enthused by that. Progressively, we've been indicating that we will deleverage, and if you look at how we've done that over the course of the last 2 years consistently, today when you close the quarter in September of this fiscal year, the debt to EBITDA ratios dropped from 4.3x to 2.5x already, and the gross debt, which was over 2 billion, is now close to 1.5, 1.7 billion. Now, that is a clear indication of 2 things. One is the intent on the corporate action side to raise funds to retire debt. That is one action. But the second thing, which is more sustainable, is that the business has performed tremendously well, which is why your EBITDA has grown. And hence the debt to EBITDA ratio has tremendously improved from 4.3x to 2.5x. And that's on a reported basis in September. If you look at it from a go-forward basis, that is certainly even better. So that should certainly give you a sense of how we've delivered on deleveraging some of these debt that we had from an acquisition standpoint.
And how do you plan to deleverage fully? Is there a timeline you have set for yourself by when you will be net debt free?
Yeah, I mean, we can target this and have a debate about whether net debt free or whether a debt ratio is the right way to grow. When you build a global business of this kind, you can operate and you should operate with a certain comfortable ratio. We certainly are looking to go below 2, which should happen in the coming fiscal or after that. But the fact remains that once your debt is at a level where the ratios are below 2, effectively that's not a a discussion point at that stage.
Give me a sense of the combined strength now that it will be consolidated, and what is the pipeline? Because you mentioned briefly about the pipeline that BBL will have, and it's on the verge of unveiling it. Uh, how does that help in improving your cash flows going forward?
Yeah, see, Biocon Biologics has always been placed, very uniquely. We are the only company in the country which has that kind of a portfolio, has FDA approval to supply products of the biosimilars range. So we continue to be in that acceleration phase. If you remember, the strategy that we had presented to our stakeholders was preserve, consolidate, accelerate. Now, we are firmly in the accelerate phase in the Biocon Biologics business. Now, as we integrate the Biocon Limited and the Biocon Biologics business, the generics and the biosimilars business, clearly there are opportunities for us to look at how we are going to grow this together. How do you create value from here on? How do you look at growing the portfolio, which is more synergistic in the therapy areas that we operate in? And we've talked about the uniqueness in our product portfolio, where we are the only company in the world which has biosimilar insulin and GLP-1s, and that is a clear differentiator, which is what we will build on further. But then we also have oncology, where we have a differentiated play, and likewise in the autoimmune space. So we see a lot of opportunity from a portfolio standpoint that we will see to evolve in the coming months as we work through the integration process.
Okay, so that